Okay, folks, we got to get started again. There's nothing that's going to help your portfolio performance as much as picking good stocks. In the book, Stock Strategies and Common Sense, I said that good portfolio management starts with buying the right stocks. And I used an analogy in that book, and the analogy was managers and baseball teams. The general manager goes out and tries to find the best players they can afford. Then it's up to the managers to get the performance out of those players. And that's where the management of the portfolio comes in place. You can't manage a stock until you buy it. Once you buy it, and then the issue is, what do I do with it? Do I hold it, or do I sell it? Or do I buy more of that stock? Okay? But good portfolio management starts by buying the right stocks. And what do we mean by the right stocks? First of all, of course, you want to buy stocks that are going up in price. Secondly, you want to buy stocks that are consistent with your investment style. And in Stock Strategies and Common Sense, we describe in some detail 4 investment styles. Mark? We describe a prudent investor, aggressive, conservative, and speculative. And since this is showing strategies, we have some strategies we call special searches. But VectorVest is basically built around the prudent investor. Those are investors who are willing to take some risk, but they want the odds in their favor. And we say the best way to accomplish that is to buy stocks that have relative values above 1.0 and relative safety above 1.0. Those are the kind of players you want to go out and recruit for your team. Aggressive investors, they want higher performance and they're willing to take more risk, but they still have to have stocks with high relative values and they're willing to take low relative safeties. These are the guys that would go out and buy the Nighthawks of the world. The prudent guys are going to buy the Ciscos of the world or maybe the McDonald's. Okay? Then we have the conservative investors. They're looking for stocks that aren't high growth stocks, that are probably paying dividends, they're generating cash, they have reasonably consistent financial performance, but conservative investors typically also look for the kicker of a dividend. Finally, you have the speculative investor that the only thing they look at is price behavior. They're strictly RT. They don't care what the stock is, what they make, or anything. I don't care what they make either, just so they make money. But they have low RV and low RS, and they're strictly looking at price performance. And these are the guys that could be in and out in a day, in and out in a couple of days. They're just looking for activity, speculation. So we have over 200 strategies, and they're categorized, most of them, in this way. But this is something you ought to look at when you're picking stocks for your portfolio. Okay? Let's go to the next slide. What we advocate, as we said before, prudent investors should buy high VST, B-rated stocks in rising industry groups in rising markets. How can you tell whether an industry group is rising? First, well, let's start from the beginning. How can you tell if the market is rising? Mark, go into ProGraphics. You can tell if the market is rising by looking at the market timing graph. Okay? If this is going up, and in particular if the MTI is above 1, it's real easy. The other thing you can do is, let's go to the home page, is go right here and see what the strategies are that we recommend. Prudent investors may buy high VST rated stocks. Aggressive investors and traders should play to the upside. And then, unless you're a trader, you can play this game. All right? It's real simple. In many cases, you don't even have to get past the home page to know an awful lot. Now, how can you tell if the industry groups are rising? Click Viewers. Click Industry Viewer. The industry groups and business sectors come to you sorted by RT, which is quite different than other displays in a service. The default display most of the time is VST vector. In this case, it's RT, relative timing. And so anything that has a relative timing above 1 is in an uptrend. Boy, that picture sure changed in the last couple of days. There's your break. Let's see who's at the bottom here. Retail department stores, REIT mortgage, building residential. Let's look at that graph on retail department stores. Woo. Here, look at this. This RT peaked here. And this kept going up, and this is going down, okay? And it's saying that that industry group is losing momentum. And finally, around April of this year, she peaked and she started going down. I wrote an essay a couple weeks ago called Tomorrow's Paper. And I had first written that essay, I guess, back in 2000 or something like that. Picked up that theme. And I think it really pays to look at industry groups and business sectors, the graphs, because you'll see this thing. And what I suggest, you don't need to look at all of them. That's crazy. What you want to look at is maybe the top 30 and the bottom 20. And that doesn't take long at all. And just get used to looking at those. You know, when the price crosses the 40-day moving average, that's the first sign. When the RT goes below 1, that's another sign. And then when the price crosses the stop, that's the kiss of death. Okay? Yeah. No, it's not seasonal, sir. Question is that seasonal? No, I got to tell you frankly, the retail department stores, well, here it is. What month is this, Mark? That's May, but it started going up here again. Started going up in July, okay? I've been amazed that this is August. What's this here? That's November. I think it goes more or less along with the ups and downs of the markets, but basically, I've been impressed by how well that industry group is done, but it is really getting hammered now. In fact, it's down here at the support level here, down at the support level that it was at in 2006. In fact, I think it's broken that support level. Get the stop price off there, Mark. It's broken that support level. It bounced back. So let's see if it holds up. I think a lot's going to depend. Somebody asked a question about Fed and interest rates. A lot's going to depend on that, what happens to this market. You don't want to go along in this industry group. Mark, go to the top one. Meat products. Let's see if there's anything good in the meat products. Now this is bouncing back. Look at the way that RT has bounced back. Something in that group is going crazy. But the point is, you want to pick stocks in rising industry groups. All right, let's go to the next slide, Mark. Before buying any stocks, check for acceptable fundamentals. Well, if it's got a RV and an RS above 1, those are acceptable. Always study the graph. What you see is what you get. And what we mean by that, if you're looking at a graph of a stock that's up and down and up and down and up and down, after you buy it, it's going to keep doing the same thing. You're not going to change it. What we advocate is you buy stocks that have nice, smooth patterns. And we have an indicator called the comfort index. You can look at that comfort index, and it's on a scale of 0 to 2. And if that comfort index is above 1.25, you're going to have a reasonably smooth pattern. If it's around 1.6 or 1.7, you're going to see a beautiful pattern. We don't have the time today to go in there and look at these graphs, but we like to see you buy stocks with nice, smooth graphs. And this is very important. Check rank with an industry group by VST Vector and by RS. I hate to quote my friend one more time, but he says you want to buy best of breed. Okay? You know, he goes on and on and on and says you got to do your homework and blah, blah, blah. All you got to do is look at RS. I mean, if the stock you're looking at has a good RS and a good RV and a good VST, you're going to get pretty close to the best stock in that industry group. So it isn't hard to find best of breed with VectorVest. Okay? Consider buying only your highest ranked stocks when you do this thing in the industry group. But it pays to look at what else is in that industry group, because you might find a stock that's a hell of a lot better than the one you're looking at. And then another one is check VectorVest News for additional information. How many people have used VectorVest News? Okay, boy, I'm pleased. There's a number of you have. But this is very, very good stuff, because you click on VectorVest News and it takes you right into Yahoo Finance. And boy, on the left-hand column there, you can find all kinds of information. And what you want to do is look at the news, the recent news on that stock, and see what's propelling it higher, what may be counter to that stock. So this is your little checklist before you buy. Now, I know when we illustrate strategies, it's bang, bang, bang. We just click, 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 and here's your portfolio, and away you go. But you as investors, you want to go through this drill. You want to go through this drill when you buy, and I'm going to say the same thing. You want to go through this drill when you sell, except you do it in reverse. What you do is you take this slide, you turn it upside down, okay? And then you put it in a mirror and you read it backwards. But you would just want to say, well, you know, is the news bad? Is it rank low? You know, you just turn everything around, okay, when you consider selling it. Or sometimes you know what the bad news is, you just get rid of it. All right?
What about
sectors? A good question. I used to like sectors a lot because they had a lot of stocks. I did a search to give me more stocks to pick from. But I've stopped looking at sectors that much because too many sectors have groups in them that aren't performing well, or vice versa. They have one sector that, take the healthcare area. They've got some industry groups that are doing well, others are not. And so the sector as a whole might not be giving you a good indication. I think if you go right to the industry group, you're going right to where the action is. You go from the market timing to the industry group to the stock. Okay? All right, let's go to the next slide. Guidelines to building your portfolio. Somebody already asked this question. Do you put an equal dollar weighted system in? Always. We always use an equal dollar weighted system. Generally speaking, for a stock portfolio that's $100,000 or less, you want to work with 10 to 20 stocks. If it starts getting more than that, you can start working with more stocks. And if you're uncomfortable with 20 stocks, you only got 5% of your portfolio in any stock. And if it gets cut in half, you lost 2.5% of your money. Unfortunately, with that line of thought, if you have a bad day, all of them can go down 5%. Since you lost 5%, you know. But anyway, diversification helps. And then redeployment of funds is a very difficult subject to cope with. And what we've done in Portfolio Manager, we set it up so that you can redeploy funds on an equal value basis. In other words, if you started out, say, with $50,000, and now you got $75,000, okay, and you're going to replace a stock, and you got a 10-stock portfolio, instead of buying $10,000 worth of that stock, you'll buy $15,000. There are some options that allow you to take all the available cash and pour it into the next stock. Well, you don't want to do that. You just keep balancing it. All right? Next slide, Mark. Use Portfolio Manager. Keeps track of investment performance, can be updated daily or weekly. Mark, let's go into Portfolio Manager. Let's just look at the auto portfolio, because I can read this stuff and we can look at Portfolio Manager at the same time. Okay, keeps track of investment performance. You can slide over a little. You can eliminate this, Mark. Okay. You can look at the ROI, the percent gain. You got vital information here on the gains and losses. Can be updated daily or weekly using this update button. Automatically adjust for stock splits and handle long or short positions. We haven't stressed using Portfolio Manager enough. We have often talked about building watch lists and stuff like that, but I think Portfolio Managers is a terrific help, even though you say, well, it doesn't keep track of dividends and it's not accurate enough. It's still worth doing because at a glance you can see what's going on, and then I'll point out some other advantages to it. WatchList View allows you to analyze short and rank stocks accordingly to VectorVest system. You have a watch list in here. Here's the watch list. Now, what I like to do with the watch list, first thing I like to do is I like to sort by dollar change. Okay, and you can see Blue Coat went up $6.92 yesterday. That's at 8.86%. Okay, now I like to look at that dollar change. The next thing I do is I look at the price percent change. Here's a little outfit called Saragon Networks, up same percentage as Blue Coat, and here we got Ferrotech went down 82 cents. And a good day like yesterday, you know, that would give me something to think about. Now the next thing I do is in the literature we say rank by VST, and we use VST as the default sort, but I like to rank by RT. Okay, we got to keep going. It's 10 minutes to 3 here, and we want to make sure that we cover everything. Okay, Mark, do the daily drill. Read the color guard VectorVest views. That's one. That's the first thing you got to do. Use rank analysis, like I did when we were in the little portfolio. You always want to at least rank by RT or VST, and look at those guys at the bottom. Sell low VST S-rated stocks, buy high VST B-rated stocks. Let's move on, Mark. All stocks are ranked by VST. You know, this is one of the most powerful things about VectorVest, is everything is force ranked. I used to subscribe to Value Line, you know, and they had the top 100 category. And it seemed I always bought the stocks that were heading the wrong direction or something. At least this way, and this is why I force ranked it. I says it's unfair to say, I've got 100 in this category, pick what one you think is the best. We're going to develop a system that says right or wrong, we're going to say this one is the best. Okay? So the best stocks are at the top, the worst are at the bottom. Use graphs with detailed analysis, okay? Case 1 study. Let's go to a case study here, Mark. And buy the 20 worst stocks greater than $1 on 8/25. That's exactly a year ago. And hold until 8/17. I'm going to lose 1.64%. Let's go into VectorVest. Okay, let's do this, Mark. Go to 8/22. A year ago. That's a confirmed upturn, all right? And we've had people as subscribers who are total contrarians. They say when DiLiddo says buy the top stocks, I'm going to buy the bottom stocks. Okay? Let's sort by VST ascending. Okay? This has a lot of low price stocks. I want the ones greater than $1, Mark. These are too risky. Go to research. Create a search that buys stocks greater than $1. And I want to sort by VST ascending. All right. Use the 25th, and I ran the search. 20. There we go. That's 3.4. What did I have, minus 1.6 or something? All right, you would have lost 3%. All right, now what I did, let's look at case 2. This is if you bought the worst stocks and just held them. You got to be really good to do that. If I bought them, I bought the worst stocks, okay, and I threw them into a portfolio. Let's go back at ProGraphics. And I put them into a portfolio. And Mark, let's go to Portfolio Manager. And go ahead. Worst stocks managed, okay? I don't know why I got 803 in there. That's a mistake. All right, what I did is I bought the worst 20 stocks. And every week, just once a week, I sorted them in Stock Viewer. And I sold the worst stock, and I bought the top stock. with that money. And I did that week after week after week. Just very simple strategy, all right? I did that just once a week. I just blindly sold the worst stock ranked by VST and bought the top stock ranked by VST. And let's look at the equity curve on that one. This was the equity curve. And actually, we were as high as much as 30%. We were down as much as $5,000. We were up here on July 19th. We were up 28%. On the 20th, go to the 20th, Mark. On the 20th, we were up 27%. And go to the 26th, Mark. On the 26th, you'd have still been up 22%. But I just took it to, I think, the 24th or 18th or whatever it is. But that system, over a period of time, would have purged all the lousy stocks and get you in some stocks with a chance. Just very simple system. It's not one that I advocate, but what I am advocating is that you look at your stocks ranked in your watch list. You look at those stocks and you follow that list of rules and you say, well, this stock's at the bottom. Is there any news on it? Okay. Mark, go into a stock. Click news. And there you are in Yahoo Finance, and you got a whole lot of good stuff you can look at here. A potential core holding, Motley Fool likes it, All Star, On Fire, whatever. But I would only do this on the worst stocks that you own, the ones that are giving you headaches before you sold them. Find out what's going on. They got a chance of recovery. This stock here looks like everything you got on it is good. That's just another tool you have. All right? Now, let's look at another case study. We got case study number 3. Case study number 3. You buy 10 high VST newcomers on 8/22/06. Mark, let's go into research, Unisearch. 8/22 was the confirmed upturn in August of last year, okay? Let's find high VST newcomers. Do it alphabetically, Mark. Hit H. You're fast. There's high VST newcomers. Run that search. All right. We bought these stocks on 8/22. We ranked them every week, and we sold the stocks that, well, we did this daily. We looked at them, sold stocks with an S, okay, and replaced them with new candidates. Then on March the 6th, we had to confirm down. We sold all those stocks. We stayed in the cash until March the 27th. Then we went long again, okay? Mark, just do a quick test from here to March the 6th with the top 10. See, those were up 50%. Well, that's to today. Do March the 6th. See, they were up 16%. No management, okay? And then we went from 327. Yeah, rerun the search. Do the search from 327. To 726. 15%. Okay. It outperformed the VVC quite a bit. Now you can close that, Mark. Let's go into Portfolio Manager. Let's look at that portfolio. Let's see. This is the high VST newcomers. All right. And this is what we ended up with as of 7/26. Total gain of 56%. I hope that's what it says. Yeah, 56.68. And Mark, let's look at the equity curve. Here's the equity curve. Nice gain here. Last part of last year, didn't do much, early part of this year, but you're up here about gaining 25% or so. And then you had that short downturn from March the 6th to March the 27th. and a real nice gain here. What's the peak value of that thing? 64%. And Mark, take this graphic off. This is what we're driving for. This is what we want to see. We want to see a nice upturn, save your cash, another upturn, save your cash, another upturn. You just want to go up the staircase. These are confirmed calls. Just keep it simple, especially if you're in a bull market. When you're in a bull market, why bother going short? Okay? Mark, let's go to the next slide. Performance analysis. You look at the winners and losers, percent gain, analyze rates of return, comparison with benchmarks such as the S&P 500. This is like kissing your sister, because if the S&P goes down and you did better than the S&P, that doesn't make you feel a whole lot better. What you want to do is look at the percent gain or loss. That's what you take to the bank. Okay? Now, last slide. Thing that I think is very, very important if you're going to be successful in the stock market, you want to keep an optimistic outlook. And by that, I don't mean that you just want to say everything is okay. It's going to be a better day tomorrow, and if it's raining, you're going to say, boy, that cloud over there isn't as dark as that one over there, so it must be a good sign. What I mean is basically you got to have confidence in yourself, confidence in what you're doing, and confidence that you're going to succeed. And if the things you're doing aren't working, you want to analyze what isn't working, and you want to take corrective measures. If you slowly take corrective measures, you're going to get better and better. And what you want to do is just keep saying, if I work hard enough and invest my time and my effort in what I'm doing, I'm going to get good enough to win. That's what I mean by confidence, is investing in yourself, having the confidence to do that. And you've got to be optimistic to do that. I've encountered so many young people. I say, well, you're going to college? No, I want to get a job first, then I'll go to college. And 90% of the time you can kiss those careers goodbye, because they don't mean that. What they're meaning is they found a reason to fail. They found a reason why they don't want to go to college. And I'm saying you want to find reasons you're going to succeed, and the best way to succeed is to invest in yourself. And thank you very much.